you think about that, if you think about that, that that means you're going to about to have a generational shift that's happening. And 90 to 80% of their wealth is locked up in that business. Then if you also think about that represents about 4.5 million business, and then about $10 trillion of wealth that needs to be transferred for the next generation. But the interesting thing about that stat, Gary, is that only 70% of businesses will have only less than 70% of businesses will be able to attract investments. So if you think about there's a $4.5 trillion in wealth that needs to be transferred, and only less than 70% of those will actually, let me put it another way, less than 30% of those will actually attract that wealth. That's a huge number, if you think about it. And the reason why is that most business owners, when we talk about value, right? They don't understand what enterprise value is. They don't have they understand when they look at their as they're looking at these particular investments or to a particular company, what they'll look at their income. They look at the top line, bottom line, but they're in between that is where you have your value. And what we say the four intrinsic are the four what we call intrinsic, or that makes up those values, are what we call things that we call the human capital, the social capital, the customer capital, and the structural capital. So you have to understand how those are tied into your business, and you have to be able to measure those. And if you're able to measure the human, customer, structural, social capital, and see where you are in those particular areas of your business, then that's when you can truly engage in what we call enterprise value. Because the higher your enterprise value is, then the more attractive it is for an outside investor or outside person that wants to participate in your business. They will be more attractive to see, okay, I understand that this company truly do understand those four things and truly has a pathway to get there. And if they have a pathway to get there, is what we call, they get to the place what we call relentless execution. When you're looking at businesses, when investors are looking at businesses, a lot of people have great ideas. Can you execute on that idea? And how we know that you can execute on that idea is a couple of things. You have to have a clear vision. That vision has to have alignment, meaning that it has to be aligned with clear methodology. You have to have accountability. That means you have to have a way of check and balance in what you're doing. And then there has to be a rhythm. And that, if you don't have the vision, the alignment, and the accountability, right, then you won't have the rhythm so that an investor can look at this business and then see that. And then what we also say, there's the 5 stage of the value maturity. And one of the things that when we look at those 5 stages, one of the first things that we say, you have to identify what area you're in, what segment you're in, so that you can make sure that you're best in class. So if it's AI, you have to understand exactly what's happening in AI. What segment are you attacking that? Then you need to protect. So if the IP, you need to protect that. If there's a system, you need to be protected so that what we build, we can't easily tear down. Then you have to build on that. You have to be able to show the investor that there's a momentum, that you have a clear path of how you build that. And then there's harvest. Then you need to be able to show them how they can harvest. So what most investors are going to look at is, what is my exit? How do I get out of this? As Stephen Covey said, you have to begin with the end in mind. And so if you're beginning with the end in mind and you're making the investor realize that you have a way of identifying, protecting, building, and harvesting, then you can get to the final stage, which is called managing. And most business owners don't look at those 5 stages because they're not clearly identified. And because they're not clearly identified, they don't see the areas that they need to improve on. But because as you, Gary, sit down, you work with several different businesses around the country, around the world, most investors, you're not the only business that they've seen. They've seen several different stages of business, so they can quickly start seeing the areas that you may need to protect, or you need to build, or you need to identify. And if you can't see that, then that means that you can't execute, and that means that they won't be able to give you the investment that you need.
Yeah, no, you're right. And the other thing is, they'd say 9 out of 10 companies fail, and it's not because they don't have the right product or service. It's because they don't have the right components. They don't have the right access to capital. They don't have the operational expertise. They don't have good networking contacts, and you need the three of those. The other thing is, it's very interesting, Kevin, because we look at these family offices. Sometimes we forget what kind of diamond in the rough they truly are. And by that, I mean they own the companies. So when you go in, if they decide to invest in you, behind the scenes, they can go to their company that they founded or their family's a legacy company, and they can go in and get the product or service inside of that company. And all of a sudden, you see a company that's got a billion-dollar valuation. You're trying to figure out why. It's because they are inside of it and they work as a team, of friends, come into deals, and that's the way the companies many times move forward. Sometimes we forget it. In fact, sometimes we forget that the limited partners of most of venture funds are high net worth individuals, family offices, of course, insurance companies, and pension funds. We forget of it. This is about selling to the top too, isn't it? You got to go where the money is, and you got to, figure out what they're concerned about today.
You're absolutely right, Gary. That when you're sending to family offices or private equity firms, these are the guys who, if your idea or your company is in line with their investment platform, then they can really scale your business as fast as possible. But the first thing that you need to realize, so when I speak to people about access to capital, one of the first things we do with the company before we even start making sure that we looking at access to capital is that we do a full what we call diagnosis or discovery of the company. Our methodology has 3 stages. The first stage is the discovery. And the reason why we do a discovery, we go a deep dive to understand what the current value of the business is, right? And we understand what the financial, business, and personal assets and the state of that company, where it is. Once we've gone through and we have a good evaluation of that company, that will also show us.
What do you mean by state, though, Kevin? Tell us about the state. What do you mean by state of the company?
So I remember I mentioned to you that you have those intangible capital, strategic, organizational, employment, financial, social. Remember, we want to find out what state that company is in. Every company, this is a fundamental of all companies. Once we're serving people, what we're really doing is that we have a method of delivering some kind of service to the audience that needs it, or the constituents that need it. The way I build that mousetrap, it has to be efficient and it has to be effective. And if it's not efficient, effective, and if you don't have the strategic capital, I don't know where I'm going, strategic value. If I don't have the organization, I don't have the necessary systems to deliver that. If I don't have the necessary people behind me or the necessary financials behind me to get it done. So you need to make sure that that is lined up. And there's a way what we do is that we measure those and see where you are compared to what we call best in class. So we look at if you're an AI company that is in healthcare, is there any other AI company that's in healthcare? Are you the first one? If there are others that are out there, what are they doing? What is out there in the industry that's leading it? And we need to find that out, because you're always going to be compared. When somebody's looking at investment, what they're going to make they have the choice of putting their dollars somewhere. So I can put my dollars in the bank, I can put it in mutual funds, I can put it in stocks, I can put it in a startup company. So you're competing to where to put that dollars. And the less risky that you are, and the more upside that they can see, then the more beneficial it is for you. So you want to make sure that you've answered the question, hey, how risky is this? And what is the upside for this? And if you can show them that, hey, I have done a deep dive in my company and I know where I'm valued and I know where my weak spots are. Here are the numbers of where my weak spots are, and I know what my strong spots are, and here are my strong spots. And here's where I compare to the best of the out there. If you can, and we do that, a quick evaluation of a company to do that. Once they have done that, the what we call, and we have the intangible capitals that they understand that. Once a company has done that with us, the next part of what our system, what we call it prepare. And what do we prepare you for? We prepare you for either business improvement or business de-risking. So are we going to improve the business or are we going to de-risk the business? Whatever we can improve, we will find ways to improve it. And it's a constant improvement. We put this in what we call a 90-day sprint, right? And the reason why is that every week we're going to look at ways that we're either improving or de-risking our business. If you have that kind of methodology behind you, then an investor is going to see that this person can execute. And then what we also then do is that we also assemble proof behind that. So we show them, here's our proof, here's our documentation. If it's not documented, it's not done, right? So how we look at it is that if you tell me that you have a 5-year plan and you just thought about it, it's not done. If you told me that you have KPIs and SOPs and it's in your head, it's not done. What is documented is done, because what most investors are looking at, again, they're getting into your business. It's an investment. They want their investment to grow, and they want it to grow over a period of time that they can then take that investment and then invest in something else. So they're going to look at how they can exit. So you always have to tell them how they enter and how they exit. And the way you do that is you have that completely documented. Does that answer your question, Gary?
That's great. That's great. So I want to go out. So we've got some of our companies here that are on, Dave, Joshua, Nilish, Niv, Lubos. So what questions do you have, guys and ladies? Any questions? Well, do we have any questions? No. There's
Yeah, I
Nilish.
have a
Okay, go
quick
ahead.
question. Sorry, I joined a little late, so I'm not sure if this is relevant, but one of the questions I have is how do you determine, so especially, the companies like us, which is in very early stage or, pre-seed seed stage, how do we answer valuation? Whenever, because that's the first question, or rather one of the questions I ask for the investment. What's the valuation cap you want or you're expecting, and then how do you answer that question?
So good question. And we have this quite a bit when we are talking to startups. They're saying, listen, I'm a pre-seed stage. How do I even evaluate, this entity that I'm putting together? And this is where I say documentation and preparation makes a big difference. So the one way you evaluate at a pre-stage is your technology, is it a new technology or a new item that you're bringing in? And if you understand, you as a business owner, you also want to understand the market that you're going into. How large is this market? And how disruptive is the service or technology that you're bringing in, right? And if it's large and it's disruptive, then what I would do then is you can back into, okay, if we got X% of this market and you make it as conservative as possible, then we know that our revenues will be X. And if we know that, then we can do a forecast of the next 4 or 5 years of how we believe our company is going to be, which is most small companies will do this. And then from that, you can then go in and say, this is what our pre-seed evaluation would be. Now, again, companies will argue with you back and forth, but if you have a very good case of how you came to your conclusion, they may go back and forth, but because you have information, documentation, and you have information beside you, now you can work that out. But if you don't come with that, then I'm going to give you the value, and the value I'm going to give to you is because you don't have that. So I'm going to give you what I think it is.
Yeah, I mean, another thing to do, what I would do, what I've done before with my company's knowledge is going down through and look at comps, right? Companies in a similar environment, what their growth has been, kind of like comps that you do for real estate, basically what their growth has been. And I based my plan on the average growth for those companies that were similar to ours. And I remember when we did Findo, we found a company that had gotten to, that was worth about $500 million. And so we took an aggregate of those companies like X.AI, et cetera, and we came up with what we thought it would be. And you remember when you're in early stage, a lot of it's like closing your eyes and throwing a dart against the wall. You don't know exactly where it's going to go. But if there's some comps out there that show the way, that give you the light to show you what's going to happen, what could happen, that helps. I mean, the other thing is a lot of it's based on the team, how strong they believe your team is and how much they believe in you, because a lot of it's faith, right? And trust and credibility.
And that's why I said I said relentless execution. You're exactly right, Gary, that the team that you build and the infrastructure that you build is what they're evaluating. They're evaluating your ability to execute. And if your vision is not clear, if you don't have accountability, if you don't have a rhythm behind what you're doing, then you're not convincing them. There's not alignment. You're not convincing them that this is going to be executed. So your ability to execute is what they're looking at. So knowledge to your question is a good question, but what they're asking, when they're asking you for evaluation, what they're asking you is, have you done your homework? What is every industry has a multiple, right? And if you know, I'm in this industry, usually companies are sold at this times whatever revenue. You don't have any revenue at this point in time, but my technology, my service is within this industry. This is the market cap. This is how much I believe that I can get. This is how this is who's best in class, which is what Gary's saying. Then if you have all that information, you say, hey, if we just take this percentage, this is what we're going to be. Then then they've shown that you've done your homework, and then that evaluation can be validated.
Yeah, and especially, I mean, so one of the things you look at is your background, right? The kind of things that you've done in the past. So that helps. The team, we've talked about this before, right? What has the team done? And have they had any exits, and what kind of exits? So all those everything comes together. But again, it's, in the beginning, it's like you don't know what you don't know. The problem is the faith. So,
and that's why
go ahead,
that's
Ben
why I
Eilish,
said,
did you have something? No, go ahead. Go ahead.
that's why I said, knowledge, that the 4 C's are important. Understand your human capital, structural capital, social capital, customer capital, and I will put the 5th, the financial capital. Understanding that, if you don't understand that within your business, and I would say what we do is not only understand it, but you have some way of measuring where you are in those areas. When you can measure that and you can say, my social capital is 56%, my human capital is 60% of what the best in class is. When you can measure those things and show them to an investor, then they go, okay, this person has taken it to a whole new level.
Yeah, that's great. Thank you.
No problem.
Yeah, sure. Anybody else? Any other questions?
This is Arthur. I apologize. I came about 15 minutes late into a meeting. So I will listen to the recording, and if you don't mind, I'll shoot some questions your way afterwards. I just want to better understand the structure of your company and how you work with startups before I shoot out questions.
All right, problem. Super. Lubos, anything? Yeah. Okay, super.
No, I'm fine. Thank you, Gary. Sorry about that. I was on mute.
Yeah, no problem. No problem. All right. Are you there, Kevin?
I am here. I'm here.
Yeah, so no, I mean the words of wisdom that you've given today are just fantastic, and I appreciate you taking time out of your busy schedule to join us. You know, we've got a great group at GSD Network of now 142, soon to be 143 um, companies inside of GSD, and they're doing incredible things. So, to each of you here today, thanks for attending. So, those of you that have your notes out there, if you got any questions, let us know and we'll get them over to Keven. It was a great opportunity. Like I said, last week I was with some of the top family offices on the planet out in Utah, and there's quite a bit of energy around artificial intelligence, generative AI. And we just saw yesterday that Mark Andreessen's building another $3 billion fund that's going to be focused on these interesting new technologies. So go out there and get them. You know, listen, it's never easy and it's never has been. It's a matter of getting shit done and moving as fast as you can. So go out and do it. To each of you here today, stay happy, stay safe, and stay healthy. And we'll be back at you again in a few weeks with another GSD Network. Thanks a lot, Keven. I really appreciate it.
No, thank you, guys. Appreciate your time. Thank you, Gary. Thank
All
you for
right.
Thanks,
listening.
Kevin.
Take care. Bye-bye.
Bye.